Alert, alert, alert. Nuclear defense system, engage. Massive clown on YouTube, detected. Fake accountant. I tried. Welcome back to Strongman Personal Finance. Joseph Carlson has recently stoked my ire, my anger, my rage. And in this video, I'm going to show you that this guy really doesn't understand the basics of accounting. Now, you may laugh and say, why does that matter, Strongman? Well, if you're going to analyze financial statements, which he does, you should probably understand some of the conceptual underpinnings of accounting. But I'm going to show you a Twitter post, a Twitter tweet, where this guy, Joseph Carlson, this evil man, oh, he's so evil. Look at those spikes. Look at that spiky hair. It's disgusting. It's like a freaking devil's horns. This man shows that he doesn't understand some basics about compensation, wages, operating cash flows, investing cash flows, and financing cash flows. What is this mysterious post? Well, here it is, ladies and gentlemen. So here we have two people. We have lunch investing. Okay. What does that mean? I have no idea. SEC should simply change the rules on SBC. SBC is stock-based compensation. Keyword, compensation. It should be seen as a cost and income statement, in my opinion. First of all, ladies and gentlemen, and this isn't even getting to Joseph yet. Stock-based compensation is in the income statement. Sometimes you don't see it because it's wrapped up in other line items, but it's there. And you know it's there because you go to the statement of cash flows, and it's an add back on the operating section as a non-cash expense. It is definitely on the freaking income statement. I'm so smart. He probably has 20,000 billion subs. All right, now let's move on to Joseph Carlson's clownish comment, and then I'm going to show you why this is complete and utter garbage. Moving it, that being stock-based compensation, from an operating activity to an investing activity? I don't know. I remember from intermediate accounting some different things, but whatever. I'm just a clown. I only have 10,000 subscribers, right? Would fix this. But I'm not waiting for GAAP accounting rules. That's generally accepted accounting principles. Because, those people that make GAAP, they don't know what they're talking about. Those super experienced CPAs that have been doing this for like 30 years. I mean, I've been doing this basically for a year when it comes to the private sector. And I already know a decent amount. Can you imagine somebody that's been doing this for 30 or 40 freaking years? Yeah, they probably know something about accounting, Joseph. But no, he knows more because he's a YouTuber and he's got spiky hair. Okay, sorry. But I'm not waiting for GAAP accounting rules to be updated to reflect true free cash flow. I'm making Qualtrim have adjusted free cash flow that shows this and calculates the actual free cash flow yield of a company as well. Next update. Okay, ladies and gentlemen, let's dive into this a little bit more. Why does stock-based compensation even show up on the statement of cash flows? Well, very simply, stock-based compensation is a non-cash expense of a company. What a company does is they say, how can I not pay my employees a ton of wages? Oh, maybe I can give them some stock in my company. And how it works, and we're going to look at a financial statement. I know you're going to get bored. I know. You just want to see 10x my index and then lose all your money in Tattooed Chef. But a company, they expense it. They're required to expense it on their financial statements over the vesting period of the stock option. Okay? Now, let's go look at Dropbox's financial statements. Dropbox. Why Dropbox? This is their financial statements for the year ended December 31st, 2021. Well, as we can clearly see, they have a lot of stock-based compensation. And we can see it's an add back from net income because it's a non-cash expense. On the statement of cash flows, you are adjusting from GAAP accounting, which I guess Joseph Carlson thinks is slow and out of this world. I don't know, because he knows better. To cash flows. You're adjusting from accrual to cash. Now, number one, yes, this is in the income statement. Now, you go up to the income statement, and you look and you say, well, it's not there. See, I don't see a stock-based compensation anywhere in here, stupid strongman. Yeah, it's probably included in like gross profit, sales and marketing, research and development. Basically, any employees where their wages are being coded to these specific line items, That's probably where the stock-based compensation is going, okay? They can't put freaking every detail on the income statement. But GAAP is so stupid, okay? Oh, here it is. Research and development, sales and marketing, general and admin. Exactly. It's in there. It's just wrapped up in these bigger numbers. Hopefully, that makes some sense, okay? But what Joseph is doing is he's saying stock-based compensation, which is basically a proxy for wages. They're paying an employee just via a different mean, awards of Dropbox, I call it Fartbox, Dropbox stock. He thinks instead of that being in operating activities, it should be in investing activities. Now, I can see an argument for both, okay? I could see it like, it makes more sense in operating, but I mean, there is a little bit of impact in the financing, okay? But when you're thinking about it from a logical perspective, stock-based compensation is a way of paying employees, executives, and directors of a company with equity in the business. Now, on a statement of cash flows, operating activities are what a business does. What does a business do? Well, Fartbox, they develop software, and they have Dropbox, and they maintain the cloud, and they have employees that maintain the cloud, and they have employees that do sales and marketing, and they have accountants, and they have all sorts of employees that kind of help run the company. That's what Dropbox does, okay? They have cloud-based storage software, and I use it personally. It's pretty good service, but a lot of stock-based compensation. Now, part of that is paying wages. What is stock-based compensation? It's basically paying wages via share compensation. Why would it go under investing activities? Investing activities are purchases and redemptions of investments or long-term assets. What does that have to do with stock-based compensation? Nothing. Stock-based compensation hits the income statement. It's part of your operations. It's a proxy for wages. And it does, in a way, affect your financing because when the employees exercise their stock options, the company gets a little bit of cash from those exercises. But it has nothing to do with investing. Literally nothing. So I go back to this and I say, why would you move it to an investing activity? This guy has no idea what he's talking about when it comes to accounting. And I'm not saying I'm an accounting genius, okay? I always have more to learn. But I've been doing this, studying it at least, and then practically applying it for at least a year. Okay, this makes absolutely no sense. So before you trust somebody that just randomly spouts off crap like this, and they say, oh, operating and investing, and I'm not waiting for GAAP, you should really ask yourself, are they qualified to have an opinion on generally accepted accounting principles? No. No. But, Joe, you can leave a comment. You could just say this is TMZ. Obviously, this is just TMZ. This is sensationalism. This isn't, a legitimate criticism of your ability to actually read financial statements and understand the core underpinnings of it. No, this is freaking TMZ, right, Joe? Yeah, Just ignore me. All right, I hope you enjoyed the video. That was my rant. No, stock-based compensation is not an investing activity. No. Out of all things, that'd be the least freaking place it would go. All right, have a wonderful day. Cheers.